Welcome to Finance Flicks Hub, the place where we break down the stock market so you can understand the real value behind the numbers. Forget the headlines and the hype. Today we're diving into three of the most talked about undervalued stocks, Uber, Pinterest, and Comcast, and showing you why analysts are paying attention. We'll look at their business models, financials, and growth potential so you can make smarter decisions. Let's get started. Stock number 1, Uber. Why analysts see Uber as undervalued. Bill Ackman's Pershing Square invested $2.3 billion, calling Uber a top undervalued opportunity. Analysts note that fears about autonomous vehicles and regulation are overblown. They don't impact Uber's current cash flow. Business strengths and model dominates rideshare and delivery markets. Transitioned from growth to profitability. Focus now is on free cash flow. Cash is being used for share buybacks, rewarding long-term shareholders. Revenue streams are diversified: advertising, Uber One subscriptions, freight and logistics. Asset-light business model allows for easy scalability without massive capital investment. Financial snapshot. Market cap, 195 B. Enterprise value, 220 B, 25 B net debt. Last year's free cash flow, 8.5 B, could cover net debt in plus 3 years. 5-year averages, net income, 635 meets, free cash flow, 2.63 B. Valuation, 23x free cash flow, 15.5x earnings. Margins, 40% gross margin. Profit margin jumped 2%, 27% in 1 year. ROIC improving, 4.8% after negative trends. Analyst estimates and stock analysis. EPS projected growth, 30-50% over the next few years. Revenue growth slowing, 17%, 9% over 5 years. Intrinsic value, stock analyzer example. Midpoint 150 column share versus current, $92, quant 15% potential return. Key takeaway. Uber shows how a company turning growth into cash flow can become a real value play. Follow the numbers, not the headlines. Stock number 2. Pinterest. Why analysts see Pinterest as undervalued. Users visit with intent, planning, shopping, and ideas, making ads more effective than on other social platforms. Future potential includes AI integration, monetization of scraped content, and personalized shopping experiences. Strong resilience through disruptions like the pandemic and Apple privacy updates. Financial snapshot and valuation market cap, 22.8 B, enterprise. Value, 2074 B, net cash position. Free cash flow, 1 B, net income, 1.93 B, margins, 50% profit, 80% gross, PE ratio, 11.84, below peers, undervaluation suggested by fair ratio, long-term value, evergreen pins continue generating traffic and revenue for years. Analyst estimates and stock analysis, EPS, 1.84, $3 in the next few years. Revenue growth, 17%, 9%. Stock analyzer midpoint. $82 share versus current, $33, 14 to 22% potential returns depending on assumptions. Key takeaway: Pinterest is a niche, profitable platform with a strong business model. The value lies in long-term engagement and commercial intent. Stock number 3, Comcast. Why analysts see Comcast as undervalued, trading near 52-week lows. Analysts like Ken Fisher and Benchmark see value with a target of than $48 versus current is $29. Comcast is more than cable. Xfinity, NBC Universal, Peacock, and theme parks like Epic Universe and new Las Vegas expansion. Challenges: cord cutting and competition from fiber and 5G impact the traditional business. Media industry slowdown creates uncertainty. Financial snapshot and valuation market cap, 110 B. Enterprise value, 276 B, 167 B debt. Free cash flow, 16 B, net income, 23 B, margins, 5-year 12%, 18.5% recent. Dividend, 4.3%, consistent and sustainable. Valuation, PE ratio, 5. Price, FCF, 6.5, deep value territory. Analyst estimates and stock analysis, profit growth, 2 to 5% annually. Revenue growth, flat or slightly declining. 127B, 133B. Stock analyzer, midpoint, 40 share versus current $29 includes dividend for total returns. Key takeaway. Even companies with headwinds can offer value if cash flow is strong and price is low. Look for intrinsic value, not just growth stories. Closing and principles. Uber, cash flow growth story. Pinterest, profitable, purpose-driven platform with commercial potential. Comcast, beaten down, high cash flow business with cyclical challenges. Value investing principles. Focus on logic and fundamentals, not headlines. Analyze business models, margins, and cash flow. Use intrinsic value as your guide. Avoid chasing hype. Invest in companies you understand. Investing isn't gambling. It's about learning, analyzing, and making informed decisions. Take your time, focus on the numbers, and invest for real value. Thanks for watching Finance Flicks Hub. Don't forget to subscribe for more insights and stock breakdowns. Stay informed, invest smart, and I'll see you in the next video.